Good morning, Sylvia. Yeah, indeed. So maybe a few words on AI, right? As you mentioned, this will come up and to interest every now and then again. And obviously, Europe won't be able to go up if the US goes down. But what we do see is, the US having this bigger upside from the whole AI story, but also the bigger risk. Just if you look at the last few sell-offs, they've also been a lot sharper in the US than they've been in Europe, right? When I started 20 years ago, there was a saying called when the US sneezes, Europe catches a cold. You can now rephrase that and say if the US sneezes, Europe actually says Gesundheit. So from a risk return perspective, Europe is actually a little bit of a safer place. And within Europe, as you rightly said, we actually like Germany the most, because what people seem to have forgotten is the larger story that, in Germany, beginning of this year, we had a constitutional amendment, which means that Germany is moving from a decade of austerity to now being fiscally expensive. Plus, all of that money will predominantly be spent on investments, which should be very good for the economy. And what people also haven't been paying attention to is, all the announcements were in H1, but actually the spending is happening now. We only had the 26 budget being agreed in the Bundestag, so in the parliament, 2 weeks ago. So this will all be happening now. And now, ironically, investors, global investors, they've lost patience on this whole story, and we've seen net outflows out of Germany. So, this combination of people losing patience at the exactly wrong time, plus the very big hopes on Germany potentially spending a lot more, is creating a pretty big opportunity. And as you said, there's no AI fears involved. There's plenty of fiscal room for Germany, and we think that will be applied over the coming months and years.
So talk to us around which sectors do you think will be benefiting the most in Germany?
Yeah, that's a very interesting discussion. So people typically like to associate Germany with the DAX, right? We've been very positive on the DAX the last 3 years, despite Germany actually growing at zero, because those companies are pretty global. Now, they will benefit from the whole German fiscal, but they will potentially not benefit as much as the smaller companies. So, mid-cap companies, which are represented, for example, by the MDAX, mid-cap DAX. Those companies have a higher Germany exposure. And within that, we like the companies that have a high exposure to construction. Because what people also seem to forget is, everybody's focused on defense spending and more investments into defense. The German government will be spending a very similar amount of money into construction, so in infrastructure. And those companies that have a footprint in that industry and that, for example, provide railways, we think have pretty good upside for the next coming years. Plus, that part of the market is still very inexpensive.